Hi, thank you for watching. My name is Ben Leybovich. This video is being brought to you as part of my financial literacy and real estate investment blog, JustAskBenWhy, where we teach you to plan for and to take action to achieve financial freedom. Today, I'd like to talk to you about income. Guys, I feel that income is one of the most misunderstood subheadings in all of financial literacy. And I feel compelled to speak to my audience about the certain intricacies and realities surrounding this subheading. Let's get some definitions out of the way. I need you to keep in mind, by the way, that I'm not passing judgment on anything I'm speaking of today. I am simply defining certain realities such as they exist in the law. Okay? Certain things may seem unfair. I'm not passing judgment. Certain things may seem right or wrong to people. I am concerned with explaining to you realities such as they exist and how we can use them to our advantage. That's all that I want to do today. So here we go. First of all, the IRS, the Internal Revenue Service of the United States, groups all income into one of three categories: earned income, passive income, and portfolio income. Let's define those. Earned income is any income that comes into our possession in exchange for work or services of any sort that we perform for others. It doesn't matter if you perform those services as an employee of a corporation, large or small, or a self-employed individual. As long as you are trading your work for money, the income that you receive is considered earned income. Okay? On the opposite end of the spectrum, okay, is the passive and the portfolio income, both of which are the domain of investment. Portfolio income is more real estate and business generated income, and portfolio income is more on the side of paper assets. Dividends, interest payments, such things, okay? But both portfolio and passive income are the domain of investing. Now, my thesis for this video is to say that I do not believe that it is possible to achieve financial freedom so long as you operate in the world of earned income. And I believe this for two reasons. Number one, earned income by definition requires you to perform labor. Okay? Number two, earned income, of the three, earned income is by far the highest taxed income, which makes it incredibly difficult, if not impossible, to get ahead via earned income. Well, let's consider the first thing I mentioned, that it requires your services. Okay, earned income requires you to perform work. Let's look at this little diagram that I have on the board here. You work, you make money, it comes to you. What happens when you can't work? What happens when you can't work? If you get sick, if you can't work for any reason at all, what happens to these dollars if you can't work? On the other side, you invest. The investments throw off income. It comes to you. What happens if you hit a patch and you can't work? You still have those investments, don't you? If you have systems in place to manage those investments, are they not still making your money? Do you see how much more stable this is than this? That's my first point. Financial freedom, by definition, at least to me, is ability to make enough money to sustain my life, my family's life, in case if I can't work. Having to work for money is to me the opposite of financial freedom. This isn't to say that I don't enjoy what I do and I want to stop working. No, I really do enjoy what I do. And I don't want to stop working. However, I want to put myself and my family in a circumstance where if I had to stop working, I could. It wouldn't cause irreparable damage to my family's financial position. Okay? By definition, it's not possible to achieve this type of financial freedom as long as you operate in the earned income category. Okay? That's the first point I wanted to make today. The second point has to do with taxation. Let me kind of get some ground rules in place here. Let's define effective tax rate. Effective tax rate is all of the taxes combined that we pay on our income. So you earn X, X minus effective tax rate, ETR, is what you get to keep. It's basically your net income. Okay? So, let's look at a scenario here that I wrote down on the board. Let's consider, for example, if what it takes for your family to live comfortably, for your life to do what it needs to do, is $50,000. Okay? Now, let's say that you are an employee in a large corporation, you make a nice salary, and your effective tax rate is 35%. That is to say that you earned income, then you pay 35% of it towards taxes of all sorts. Okay? Then what's left is $50,000. So the question is, how much did you have to earn in order to pay taxes on it and then have $50,000 left? Well, to keep $50,000 at an effective tax rate, ETR, of 35%, you would have to earn $77,000. Now, to keep $50,000 at an effective tax rate of 15%, you would only have to earn $59,000. That's very, very, very considerable difference. Let me ask you this. What's easier, to earn 77 or 59? That's a trick question, guys. You're not supposed to answer that. But yes, it's easier to earn 59. I promise you that. How does this happen? How does the 15% effective tax rate happen? Okay, I'll tell you how it happens. It happens in the passive and portfolio income side of the equation, because investment income is not subject to Social Security tax and some other taxes that earned income is subject to. So, another way of looking at this is to say, if you earn $100,000 as an investor, pay 15% tax, you're left with $85,000. If you earn $100,000 as an employee and pay 35%, then all you have left is whatever it is, $65,000. What's better, $65,000 or $85,000? You earned the same amount, but the way that you earned it made it possible for you to keep much more on the investment side of the equation as opposed to the employee side of the equation, or self-employed earned income side of the equation. So coming back to my thesis, that it is not possible to achieve financial freedom on the earned side of the equation, making your money as a trade for your services. Not only do you have to be actively involved in trading your services in order to generate earned income, but you have to generate a whole lot more of it in order to achieve your goals, as I've just shown here. Now, understand, I'm not a CPA. These are very, very rounded off numbers for example purposes only. Guys, it's a lot more complicated than this, but yet it's not. The whole point of this game is that it's really that simple. If you have investments and you have systems in place that control your investments, then you have income regardless of many of the things that happen in your life. That is financial freedom. That's not all of it, but that's a lot of it. That's what this game is about, guys. However, on the income side, even if you make $300,000, $400,000, $500,000 a year, if you can't work, you don't make the money. We're all human. Things happen to us in this life. We need to be prepared. My answer to this, financial freedom. Make your money on the investment side of the equation. Guys, my name is Ben Leybovich. You can follow me at www.JustAskBenWhy.com. You can also link up with me on LinkedIn, Twitter, and Facebook at /JustAskBen. I appreciate your time. I hope this video explained some of the issues around the idea of income. And I'll speak to you next time. Thank you.